AJ Rounds, welcome to the Predictable B2B Success podcast. Thank you for doing this. Really appreciate you having you on. AJ, you are the co-founder, CCO, and board member for RevRoad. Now, RevRoad,
Uh-huh.
as I understand it, is a venture services firm that infuses human capital into small companies while raising capital. Interesting concept. I'd love to dive into that. But perhaps more interestingly, at least from my perspective, is that you're a two-time CMO, four-time founder, and have you experienced three exits? And I'm curious, with your last startup, I believe you took it from 2 to 25 million in about 3 years, employing more than 150 employees. That's quite an achievement in itself. Why start railroads? Was there a particular incident or event that triggered this journey?
Yeah, Vinay, great question. Thanks for having me on the show. It's a pleasure to be here. From fellow podcaster to fellow podcaster. This
Appreciate
is,
it.
I love on this side. I don't get to be on this side very often, so this is great. Yeah, we started RevRoad almost not by accident because it was all very intentional, but we wanted to solve any good company goes into anything trying to solve a problem and preferably a big problem that has a deep pain point that there's a willingness to pay. So RevRoad came about because all of us are entrepreneurs. There are six of us founders, and we thought there's a lot of companies that go out of business that really shouldn't. And it's not necessarily because of lack of money, although that does happen. It's really lack of expertise, lack of knowledge, lack of skills in certain areas, right? So we find that some founders are great at tech, but they're not good at sales and they're not good at finances, or vice versa, right? So we take our a team of professionals, our SMEs, and we plug them into certain companies that we bring into our portfolio and help them grow. And we do that first, and then we write a check. So you asked about my previous exit. That's why RevRoad came into existence because we wanted to reduce that 90% failure rate
Hmm.
and hopefully turn it to a 90% success rate. And we're not quite there yet. We're, I think, about the last time we calculated about 67% success rate, but that's way better than what's on the market right now. So we're pretty thrilled about that. The last company that I started and exited, so we did housing for the oil and gas industries, specifically in North Dakota, in the United States, North Dakota. We did a little bit in Canada as well, Nevada, Texas, Louisiana. And we saw another need there. And the need was housing on site for these workers that work, a lot of them 12-hour shifts, 6 days a week.
Hmm.
And they're there for long periods of time. And then they go back home. They call them rotations. So we saw this need because a lot of folks were traveling 2, 3 hours one way to get to the job site, and a lot of fatalities were happening as they got too tired at the wheel. So we built housing for them on site
Hmm.
and serviced them, housekeeping, food services, like a hotel essentially. And it went really well, and we grew that company fast. It was a roller coaster because it depends on who's in the White House, is the result on the oil and gas industry. But yeah, we did great. I took a small exit out of that company and had some time and some resources, and we helped build RevRoad after that. So that was the exit prior to RevRoad, if you will.
Certainly. And RevRoad, you've currently got something like 80 plus companies under management, and you're generating well over a billion in revenue. Given
Really quick, it's not actually revenue, it's valuation.
valuation,
Yeah.
okay, sorry. So, given your journey to date, what would you say is your personal area of strength?
So I love this question and great job asking this question. It's always hard to talk about yourself, right? But I feel like my strengths are number one, strategy. How should companies grow in what way, specifically on the go to market side? So I'm very marketing and sales focused. I have been for the 3 decades I've been in my career. I've managed sales teams and marketing teams across the country. So I'm very focused on that. I love to connect people, so very network community friendly. And then I love to work with investors. So I really, and RevRoad was part of myself, me coming out and saying, hey, I want to really learn how to work with investors, raise capital, and understand the venture space really well. And that's where I feel like I've spent a lot of my time is developing those skills.
Mhm.
As CCO and co-founder, I work with a lot of our founders and maintain a lot of our, investors, and work with a lot of our investor communications, making sure that they're in a good spot, they understand what's going on, answering questions, and getting referrals for more investments as we need them. So those are some of my skill sets that I bring to the table.
And in that area of strength, what would you say is something that businesses don't know but should?
Yeah, great question. The thing that makes me crazy, Vinay, is when companies think they have the solution and they love it and they think it's the most amazing thing, it's going to change the world, but they've never even asked their customer. I'm like, go find out, go validate that this is
Mhm,
a product or a service or a technology that people will use and want and pay for. And oftentimes when they do that, unfortunately, some of them don't want to go ask because then they're afraid of the answers they're going to get,
mm,
but that helps you pivot to the right thing or abandon altogether and go on to a better project or a better company or start find a better
mhm,
solution for another problem. So I encourage founders all the time, please, if you haven't done product solution interviews, you've got to go do them. I said product solution, I meant problem solution interviews.
mhm.
You've got to go do them. Go ask the market what it is that they think about it and be willing to take that feedback and say, it's great. It's not great. Let's pivot. Let's continue. Let's go faster. They'll tell you what should happen.
That's an interesting perspective. And I wonder if it works the other way around as well. Because I say that I'm saying this because I think I came across a survey where startup founders were saying that culture was the second biggest issue or biggest concern for them after recruitment. Now, are there perhaps questions that you should be asking our team and perhaps some foundational elements that need to go into creating the kind of culture where it's almost natural to be in touch with your customers and asking them those great questions while making sure that the overall endeavors that you engage in are, of course, aligned with your business objectives as well?
Yeah, I think the companies we've seen that have been successful are companies that kind of build the product or the service or the technology in tandem with the customer. So they're not necessarily doing formal focus groups, although that is an option.
Mhm,
They're not necessarily doing surveys, although that's an option too. They're not necessarily throwing in things out on social media, although that's an option as well. What they are doing is the ones that are successful, they bring in potential customers, contacts, those that are in their
mhm,
circle of influence. They them in and they run things past them and they ask them questions and they show them what they're working on and have them use the website and have them play with the product or technology such that they can see how the customer would interact with said service, product, or
mhm,
technology, and then they can adjust accordingly. Or maybe heaven forbid, the customer or the potential audience gets bored with it after 30, 60, 90 seconds, maybe 2 minutes, and then all of a sudden they realize we've got a bigger problem here. But it's always good to bring in folks as you're building the product, bring them along that journey with you. Of course, if needed under NDA, right? Let's get a non disclosure agreement signed if needed. But it's good to bring them along with you so that you're getting real market feedback from the get go. Company, and the other thing I would say too, so to piggyback off that, is not only bring them along the journey with you, but go out and get customers right away, even when you're not ready,
mm,
even when the product is not fully designed, built, or created, because those customers, you've sold them a vision. If they're willing to put their money where their mouth is and invest in you early on, you know you've got something. And then you be very clear and very upfront with them saying, hey, we're new, we're starting this out. We're just scrappy and we're early stage, but we want to grow with you as a long-term customer. And of course, savings will be passed on to you that we can give you. But it's, I think, interesting for customers to go along that ride with you if they're the right customer.
mm,
Because then again, you're getting market feedback, you're getting real time intel, you're getting responses, and they're helping you build your product alongside you without you having to pay more money for more product or dev people or more employees, essentially, right?
mm,
And the companies that do that and they're very upfront about it and they're very open about just doing that with their customers, they're so much more likely to be successful than companies that just stay stealth mode, stay quiet, build what they're going to build, and then launch at some point in time, right?
mm,
Because you just don't know. Did we hit it? Did we not? We don't know. We hope. It's not a good strategy.
mm,
So bring your customers and your network along with you as you're growing and building your company. I think just good business practice for any company.
mhm. Ideal customer profiles. It's certainly talked about a lot. I would say most founders and the C suite of most companies would be very familiar with the concept. In your experience working with companies, do you find that perhaps there is some understanding of the concept, but you're having to come in and perhaps ask a few tough questions or difficult questions in order for them to go a little bit deeper? If so, could you kind of describe how you guide them through this process?
Meaning, just to rephrase your question, meaning do founders in our portfolio understand who their ICP is and use that quite often? Is
Correct,
that
yeah.
what you're asking?
Especially given the process
Yeah.
that you were outlining before.
Yeah. Oh, another great question. I wish I could say yes, everyone comes in and they know exactly who they're marketing to, and they've dialed the ICP in and they have it documented. Rarely is that the case. Most of the time, they have to go out and figure out who that is. So, again, we encourage them to do problem solution interviews, go out and talk to the market. We encourage them to refine into a certain vertical. Companies that are like, we can really sell to anyone, anywhere, that is not a good strategy. So, we encourage them to pick a beachhead, we call it, an area or a specific vertical or industry to focus on. Focus on that, dial that in, and then you'll move into other verticals and industries later on, right? But we encourage them to find out who it is that's going to buy this product, service, or technology, and then really once they find that out or figure that out, then document it, share it with that within their organization, and keep in mind the companies we work with are they're earlier stage, they're post revenue usually, but it's seed, Series A, sometimes pre seed companies if they're really good, but that's kind of the space we're playing in to put it into venture terms. And so we just say, hey, once you have your ICP dialed in, don't deviate from it.
Hmm.
Go with that and focus on that until you've for sure dialed it in and you've created significant amounts of revenue from that, and then branch out from there. The problem is a lot of companies, they go into a market thinking I can tackle multiple industries on multiple fronts. And to do that takes millions and millions of marketing dollars, oftentimes, and they just don't have that. So focus on a network that you really think would gravitate towards this product, service, or technology, and then test it. See if they really go for it. And if they do, what is the messaging? What does the branding look like? And what should you be how should you change your company to better match their needs?
Hmm.
So it's an easier,
Hmm.
right?
And that makes a lot of sense. Now, at RevRoad, I believe you're of the belief that capital alone isn't enough to solve a startup's problems. How are you addressing the gaps that money itself can't fill?
Like I said, we everything we do. So we're a little bit reverse of a venture
Hmm.
capital firm, like I mentioned before. So we infuse services or human capital first and foremost to fill in those gaps, which prevents them from having to hire or recruit certain key individuals right from the get go. They can rely on us for help for that
Right.
at first. And then we go and we raise capital for them, typically around 250 to 500,000 as a bridge loan to get them going, get them fired up, get them started. And then once they prove that they can hit certain benchmarks or milestones, then we will kick them over to our sister company, RevRoad Capital, which is a true fund,
Hmm.
and they will write checks anywhere from 1 million to 2 million and bring in their network to fill a round. We just finished a round for one of our companies. I believe they raised 25 million at a $100 million valuation.
Hmm.
I believe is what it was. And we helped put that together and build the interest and bring in the potential investors along with RevRoad Capital, which is really one and the same.
Hmm. So I would imagine that you have something of a systematized process, if you will, for scaling startups. And I was wondering if you could talk us through what that looks like for a potential startup.
As far as the raising the money side, or for which side?
For scaling up, if they're coming to you and you're obviously offering fractional services, what does that
Mhm.
look like initially to get to that second level where RevRoad Capital can potentially offer them some financing in order to scale it even further?
Yeah, good question. So it really depends on the company and where they're at. If they're a B2B play or a B2C play, if they're a SaaS company, if they're a product company, it depends on where they're at. But what we do, generally speaking, is
Yep.
we bring them in after they've hit the criteria, they've pitched, they meet all of our requirements. We bring them in. They work with our strategy team up front, which is amazing. Yeah, we have some folks from, our strategy team is just incredible. We've got some consultants from, I'm just forgetting Mead. Or no, oh, I'm just, you would know that the names, if I told you right now, they're like Goldman Sachs, of course. But anyway, I'll think of it and then I'll throw it
Sure.
out in the podcast. Maybe but anyway, several high profile national consulting firms. So they come in and they do the strategy side, the strategy work, build out a roadmap for what it looks like for growth for the next 9 months first, and then 12 months after that. And then once we've done that, then we send them over to sales and marketing, right? And then to the dev team if they have technology that we're building. And then alongside what we're doing with them, then we're going to bring in that financial piece, make sure their books are up to date, and they're not just looking and recording expenses, but they're doing the pro forma work and the prediction work. They're going out and they're modeling what finances will look like in the future.
Mhm.
Okay, we're doing that work for them as well. And then those are the main things. And then once they hit certain levels of income and or of revenue, really revenue is the main indicator, then we say, okay, now you've got enough revenue. We feel like you've got good traction and you're going to be a thing. There's a there, if you want to put it that way. And then we go out and we turn them over to the RevRoad capital team, who then says, let's, based on the other companies that are pitching us, let's see how they stack rank within those other companies coming in from the outside. But the goal really is to help the companies that are in RevRoad first. And then if they hit those benchmarks, and it depends on the industry. I can't really throw out general numbers because it really just depends on the
Sure.
industry and how much profitability they have and everything. But if they hit the benchmarks, then what we do is we say, okay, we're gonna go out and we're gonna advertise this, if you will, not on a really wide scale because you really can't advertise funds like that. But we're gonna say, hey, we're gonna go circle this around our network and say who is interested in funding this company, and then we match a certain portion in between $1 to $2 million depending on the deal, and that's how we get it done. So that's from start to finish. They come in strategy first, like I said, sales and marketing depending on what they need, the dev team depending on what they need there, the finance team for sure, and then we start working on how to raise capital, how to build your pitch decks, what that should look like, who to approach, and then we turn them over to Rever Capital, and they take it the rest of the way.
You said they need to meet certain requirements initially before you take them on. I would imagine that product market fit would be one, at least some initial indicators in that space. Have some traction with the revenue. But I'm curious, if you're offering fractional services to these firms, how are you
Mhm.
able to determine that they are not just open and teachable, but also a good fit for your team?
That's the $1 million question. That is truly the hardest thing, right? We can look at their finances and see where they're at. We can look at their sales, the orders that have come in. We can analyze the industry they're in, the magnitude of multiples when they exit. We can look at all those things. But the wild card is always, are they a good fit for RevRoad? Are they a good fit as an entrepreneur? Can they hack it when things get tough? And that's not a perfect science, right? This is a very soft science. So what we do is we run them through, we have a series of what we call H's that tell us or help us really look into their character more. And of course, this is over multiple meetings in person, preferably not just Zoom. And we bring them in and they pitch personally to us. And what we're looking for is those acronyms. Again, the 5 H's, it's an acronym. The H's stand for head, which is, are they smart? Are they capable building this company? Hands, are they willing to work? Are they willing to get in and get dirty and make it happen, even when it's hard, because it will be very hard? Heart, if they're not passionate about what they're doing, then they shouldn't be here in the first place. So that's very important, right? Humor, can they laugh along the way? Can they not take themselves so seriously? The first sign of trouble, they're gonna crumble because they can't have fun with it. And then the most important one is humility, right? And that's our fifth H. And what that means is, are they teachable? Do they take feedback well? Are they trainable? Like oftentimes in pitches, we'll say, hey, this is a terrible idea. What is your response to that? And if they immediately bristle and get very defensive, we're like, oh no, this is probably not the best fit. But if they're one of the founders is more interesting you say that, tell me where you're coming from and why do you think that? I'd love to know. You can just tell by testing him that way and throughout interactions
Yeah.
how they'll respond to certain circumstances or certain situations. And that gives us a lot of insight as how they're going to be with as founders. Now, you do have to make sure that they have all the cap table things in place, their founder docs in place, organization docs in place. I mean, the business needs to be formatted in the right way where they can raise money later. You got to have all those documentation things in place too, and watch how they interact with each other. But as they interact with us, that's what we're looking for as far as the characteristics or personality traits that we need to have for it to work. And funny enough, this is crazy. This is not what we did not we did not think this would happen. Like this was a surprise. But after almost 8 years of doing this, we've realized that most of the companies that have failed within our portfolio have not been related to money or product market fit or some of those things. It's been related to personality things and or founder issues. So it's really that question that you asked is so important because it is the founders. Like the founders make all the difference. We can help them to a certain point, but I always say you can't take you can take a B idea, if you will, and put an A team behind it and it will be successful. But you can't take an A idea and put a B team behind it and have it be successful.
Mm.
You just can't. So you have to have that A team every time. And if we have concerns about that, we ask them, yeah, we don't extend an invitation to be in our portfolio.
Very interesting. This idea of failures occurring because of founder related issues, including that of personality. I'm curious, there perhaps a audit that you conduct apart from the 5 H's to help founders be aware of potential issues as well as strengths in order to develop the culture that he or she feels is required to fuel the scale up journey for their company.
Let me make sure I understand the question. You're asking, are they, why don't you rephrase that? I'm not sure.
Sure. Do you speak with founders? How do you address the culture issue in order to make sure that it is one that fuels not just the mindset, but also the heart behind scaling up their company?
Oh, interesting. Yeah, there's no, I don't know if there's a specific way we do it. But first of all, we're going through, you asked about vetting and due diligence and stuff in the previous way you asked the question. We go through all the numbers, all the books, we pull up all their debt loads, everything. We got to know because we are literally a minority shareholder in their company, because we do everything in exchange for a minority stake in equity. We have to know it all. So we go to their banks, go to their accountants, their attorneys, we go to everyone, right? And make sure that everything is accurate what they've
Mhm.
portrayed. So that's the first part. That's the part that, everyone would do that we're very careful about. The second part in analyzing whether they're a good culture fit for Everett or not is trickier. That's when you have to have face to face time, like I was saying
Mhm.
before, and you have to know them. We like to take them into other environments, like out to dinner, or we try to go do something fun with them, golf or something outside of the office so we can kind of get to know them as people
Mhm.
before we bring them on. But the culture side of it, yeah, that's super important because again, we just want to make sure that we get the right founders in the portfolio. And it's really just assessing how they interact with their team, how they interact with each other if there's multiple founders. What do their customers say about them? If their
Mhm.
customers say, "Oh, it's just hard to work with them. It's difficult," then that's probably not a good fit for RevRoad either. And then we're looking at things like to address the scaling question, is this a company that will scale? Is this an industry that will scale? Is there an opportunity for large growth or fast growth in
Mhm.
this industry? Because we're not a venture firm that's going to bring in hobby businesses, we call them, or lifestyle businesses, or the small bakeries and automotive shops and stuff. Kudos to them, nothing against them, but they're not scalable. They would not go national, if you will, or international, frankly.
Mhm.
So we're looking for those companies that can do that and that have the founders that can go along with the ride, just based on their interactions that we have. We've got enough experience now, and we've gone through several thousand pitches, probably around 10,000, I would guess, and or more. And we've learned like what characteristic traits hit the mark, which ones do not. And you can tell after doing it long enough, you'll see the way a certain founder like kind of gets sarcastic or snippy at someone
Mhm.
where they really should have or whatever. And sometimes that's you can tell that's drive and ambition. Other times they're not on the same wavelength as us,
Mhm.
and we need to make sure we can either address that or it's just not a good fit.
Mhm.
We're very honest too. When we bring in people, we don't typically have people leave a pitch at RevRoad unless we've been able to offer something of value to them, some sort of feedback or help or connection or something to where they don't leave empty handed. They leave with something in the bag, but oftentimes it's no, we can't work with you.
I'd imagine that working with 80 plus companies under management is quite a feat in itself. I'm curious, how do you ensure that each company receives the attention and resources needed to thrive?
Yeah, great question. And that is a challenge. It's a balance, and we're not perfect at that. That is one area that we often struggle with. But what we do is because it's time based, so companies, and this changes, but we bring on either 3 to 4 a quarter, or we have an allotment of hours we can put towards our companies,
Mhm.
obviously. So that'll dictate how many we can bring on per quarter or even per year. And they come in and they're coming in different time frames. So the companies that come in, and we're now almost in fall of 2024. So the companies that come in fall of 2024 are going to be it's a different cohort than what comes in the winter of 2025. And like I said, we work with them for about 9 months to see how they do first, and then after that we bring them in for another 9 months, and then another 12 to 18 months after that. So it's typically a full 2 years, and then they advance out, if
Mhm.
you will. So they come in, we work hard with them, and then they advance out. Okay. Now, something new that's not, we haven't fully, this is hot off the press. Okay. So this is just only on this podcast thus far. We haven't gone mainstream with this yet, exclusive. But we are going to be starting and raising a fund for a kind of an accelerator program, similar to Y Combinator or Techstars, that we're going to attach to the front end of the RevRoad experience so that we can test companies in earlier stage and see how they do before we bring them into the RevRoad services package, if you will. And there will be a little bit of money offered to them, 10 or 20,000, I can't remember the number we've decided, just to kind of keep them going. So it's very early stage, very accelerator based, and then we'll see who rises to the top in that one. They may funnel into the RevRoad portfolio at that point.
Mhm.
So that's a new thing that we're just getting started because we feel like that could be a really good way to vet some more of the companies before we actually bring them on. Because once we bring them on, there's a pretty large commitment for them and for us.
Mhm.
And there's quite a bit of resources involved. So we want to make sure we get the right ones every time.
And appreciate you sharing that. I'd be right in saying that you're in picking the companies that you work for, they have a clearly defined niche that they're operating in, as opposed to operating in, say, more of a red ocean type environment.
Yes, typically that's what we want to. If they're not there, we move them to that. RevRoad itself is also we're refining our investment thesis right now. Currently, Harold Alvarez and myself, we went over to Dubai just a few months ago in June to a big family conference, a big family office conference where there was a lot of venture folks there, and they were talking about their investment theses and what they do. And at the time, RevRoad was still industry agnostic. So we brought on companies all over the place and products and services and tech and whatever. We were looking for the right business model
Mhm.
and the right unit economics, not necessarily particular industries. And the responses we got when we told those folks, again, another example of go test your market, right? When we told those folks this is what we're doing, they're like, that's insane. That's crazy. Why don't you specialize in something? And so we got thinking, really, we should. So now we've refined our investment thesis to where we focus on a couple of select verticals. Number one is SaaS companies.
Mhm.
We're really focused on SaaS companies because we're good at that. We have deep knowledge there. We're focused on AI companies. We're focused on clean tech, specifically mobility tech. So EV and all things related to electric vehicles. We're really good at that.
Mhm.
We're focused on, oh my goodness, I'm just trying to remember. Yeah, fintech, ed tech, just a few more tech verticals, right? And that's where we focus. We're not going to do a lot more of the CPG companies. We're not going to do consumer packaged goods. We're not going to do a lot of product based or service based companies anymore, just because we're not as deep in those spaces as we'd like to be. So now we're going to focus on those verticals in the tech sector we talked about and more of the AI and IoT, Internet of Things as well. Yeah.
Right.
So that's where we're at. And
So
we're excited about that.
I would imagine that would help you with attention and resource allocation, especially when you've got quite a spread. Is there anything else in particular that you find helps you prioritize which portfolio companies to focus on?
Well, clearly, as a venture capital firm, we're obviously interested. Our number one goal and priority is to get a return to our investors. So, the companies that are really exceeding,
Mhm,
we've got a couple companies getting close to the billion-dollar valuation. Of course, they're going to get more of our attention
mhm,
than others, right? But we try to keep it as equal as we can going through the RevRoad experience, at least through that 2-year time frame.
mhm,
But sorry, I'm just making sure my battery is going to be okay. But it is tricky, right, to determine, okay, which companies should we spend the time on, which companies should we not, and it's really just a function of financials, right?
mhm,
Who's doing the best, and we'll go back and revisit those even when they're out of the 2-year window. We'll go back and visit those that are doing super well. Make sure they have the resources they need because they're
mhm.
growing fast, right?
Certainly.
So that's it.
Okay, brilliant. Are there particular core values at RevRoad that you use to guide your interaction with startups and influence your decision making?
Yeah, another good question. So this goes back to our vision, right? So our vision here at RevRoad, we have the 5 H's to analyze characteristics and culture,
Yeah.
right? But our vision here is we want people to show the 3 G's. We love alliteratives here.
Mhm,
The 3 G's and cares, right? So those are grit, they can make it happen. They can, or we can make it happen. Grit is us showing grit, our founders having grit, our partners having grit, our investors having grit. We're always in the growth mindset. So, what does growth mean in whatever
mhm,
circumstance or scenario we're in? And then gratitude, which is a funny one. You think, why does that even matter? But you'd be surprised that when there is a gratitude,
mhm,
whether it be, hey, thank you for helping us out RevRoad, or it's more thank you for showing me the right way, or it's thank you for the wonderful connections we got to some clients that are going to close next week. That changes the entire dynamic. So we're looking for that gratitude as well. And then ultimately, the last one is cares, which doesn't it's not a G alliterative, but it's cares, and that's a whole nother acronym which I won't go into. But cares is, do you care? Do you care what you're doing? Do you care what other people are doing? Are you focused on just you, or are you caring for others around you, which of course builds the entire ecosystem,
mhm.
and all boats rise with the tide, right? You'd be surprised how many people just take and take and take. But if you're giving back and caring as you go through this experience, people are more mentors, advisors, investors, partners, whatever, employees. They're so much more willing to give back if you're giving to them first.
Thinking back to when we spoke earlier, where you mentioned that you're of the belief that entrepreneurship can solve global problems, and you mentioned the term the virtuous cycle of entrepreneurship. Could you elaborate on that and share examples of how this cycle has played out in RevRoad's portfolio?
Certainly, yes. So the virtuous cycle in RevRoad is really just let's get our portfolio companies involved in our portfolio. Let's build and grow them through mentors and advisors and community. Okay, let's get them to profitability. That's the bottom part of the cycle. And then once they are profitable, let's teach them early on to give back, to find the charity of choice or multiple charities of choice, and to wherever they've been given a lot of just help and sustenance and guidance along the way, we encourage them to give that back as well as they become, even now, but as they become more and more successful. Because I truly do believe what you said earlier is important. You can give and give, but the way to really make a difference in this world is teaching people how to give to themselves, right? So, for example, we support a program that's at a local university called Utah State University. It's called the SEED program, Students, Entrepreneurs, Education, Dynamic, or something. I can't remember the exact acronym. I should know that, but I just can't remember. And what these students do specifically is and we support them because they go out and it's students across the campus. So it can be engineering students, nursing students, fine arts students, biology students, and entrepreneur students, right? It doesn't matter. They go out across the country, typically third world countries, Cambodia, think of Peru, think of Dominican Republic, the Philippines, all around the world. They basically go for 3 months in a what they call internship kind of capacity. Okay, and they're going and they're working with a company called Mentors International, who's the partner with Utah State, which is the school we support. And they help people either scale or build or grow or even start a business, right? They're helping entrepreneurs get better at doing what they're doing. For example, okay, story time. You ready for this?
Mhm. Sure.
Jose I think he was in the Dominican Republic. Jose had a tortilla delivering route business. Okay,
Hmm.
but he was an older gentleman, about 60. Okay, he delivered tortillas around about a 3 block radius because his moped was really old and almost died every day, and he had to repair it literally every day. So he would deliver tortillas around 3 blocks and made 60 to 90 cents a day, not very much. So some of our students came in from Utah State with the seed program and said, okay, how can we improve your business or increase your business, Jose? And he's, I don't know. And they said, what if we improved your mode of transportation? And he's, oh, yeah, that would do it. So they helped him raise a little micro fund and he got a newer
Mhm.
moped, right? Then instead of 3 blocks, he was able to hit a 30 block radius, right? And he went from, let's say, I think it was 80 cents a day. He went from 80 cents a day to $8 a day. That's a big deal. That's a 10x jump,
Hmm.
right? They said, okay, now you've increased your route size and you're getting way more sales. Now let's add an additional product to your product line, to your offering. So then they brought in beans or they brought in tamales or something. I don't remember what it was, but they brought in additional products,
Hmm.
right? And he started adding these to his route. So it went from $8 a day to $18 a day.
Hmm.
Wow, that's a huge increase, right? And so what I'm saying is that changes the world. That changed his life, it changed his family's life, and all of his people that he interacts with life because he had more resources to now give back. Simple.
Hmm.
We simply just helped realize that he needed a moped. Story number two, and then I'll end with this one. For this section, in Cambodia, there was a bricklayer. I don't remember his name. I think it was Sylvia or something. And he was laying bricks. Okay. And again, another couple students, nursing and I think fine arts. They didn't even have business background, but they went and they said, hey, how much do you spend per brick? And he says, I have no idea. And they said, why don't you know this? And he says, because I commingle all my personal finances with my business finances. No, don't do that. That's bad. So they said, what does your spreadsheet look like? I don't know. I don't have one. So they helped him set up a very simple spreadsheet where he could track his business expenses separate from his personal expenses, right? Then they realized he was spending X number of dollars per brick or cents or whatever it was. And they said, why don't you go to your vendor and see if you can get that down? And he did. And they said, why don't you go to your now finished your customer base and see if they'll spend more? They did. So they're like, he's like, wow, I'm spending now less money and I'm making more money. And it's the same story. He went from $3 a day to $30 a day. And he's, I think I'm busy enough. How can I can hire in 2 employees? Great. And they helped show him how that would work on a spreadsheet. So just those simple things, buying a moped, building a spreadsheet, that's how we change the world.
Hmm.
By increasing entrepreneurship that give back resources to these folks that can then help their communities. And I truly believe that, and I love all nonprofits. They're wonderful and they have their place. But if you're not teaching the people that you're serving how to then do it for themselves, you're going to be in this endless cycle of just giving, giving, giving. And they never get out.
Brilliant. And for those listening where ideas might be sparking, how have you found local nonprofits or organizations that can connect you with these potential business folk, small business folk, who are open to new ideas and possibilities?
Yeah, there's several partners. Mentors International is a big one. We work through, of course, our local university here to make that
Mhm.
difference. But what we do is, as they come to us, we also have a nonprofit that's attached to RevRoad. We have those folks vet any nonprofits that come to us. We want to make sure that at least 90 cents on the dollar is going back to the audience that they are serving. A lot of nonprofits get in trouble where their admin is too heavy, and then a lot of the money doesn't go back to their constituents. So we want to make sure there's at least that requirement in place, and then you'll find them there. If you go on and just do a search, there's so many that help with entrepreneurship specifically, and we've just been careful to vet the ones that we like.
Given the many conversations you have around scaling up companies, what do you find are perhaps some of the common or recurring myths and misconceptions about scaling a business that you hear time and time again?
There's a lot of those, right? But the one we hear quite often is, I didn't realize it'd be so hard. Why is this so hard? We thought that starting a business was just overnight success. We're like, yeah, that's an overnight 10-year success, is
Yeah.
what that is. And we talk about this. So we also have, I'm the host of our RevRoad podcast
Mhm.
called the Midnight Founders Podcast. Go check it out. It's on Apple and Spotify, and I think YouTube and others, but it's called the Midnight Founders Podcast. And we talk about these stories all the time, right? Where founders, they get started with a business, they're in the trenches, they're up at midnight, they're not sure how they're going to make payroll. Like it's an ongoing,
Mm,
everlasting thing to build a business, right? And a lot of people don't understand that until they get into it. We help them on this podcast get tips and tricks and help them just hear from other people that are in it too, so they don't feel so alone, and then give them advice on how to solve certain problems, how to raise money the right way, or how not to raise money the right
mm,
way, or how to hire your next key hire, or how to build another location without sapping all your resources. There's all these things that they're talking about on the podcast that are so helpful, right? But I think the biggest one is that like we didn't realize it would be so hard and all consuming. So of course the challenge then becomes, how do I find the right work life balance, because I'm working all the time?
mm,
And that's personal to everyone. I don't know if there's a right answer for everyone, that you can't, there's just not a blanket answer. But you have to figure out like, how much time do I want to spend building my company, which needs to be sufficient.
mm.
And I don't want to let my family relationships and or my hobbies or interests or spiritual needs, whatever that looks like for you don't want to let those go by the wayside either.
At the intersection of scaling a company and the cultural as well as human aspects of an organization, what would you say are perhaps a couple of aspects that you find doesn't get talked about very much? If so, what would they be?
So, what elements of building a company doesn't get talked about enough? Ooh, that's a good question. Let me think about that one. That's a good one. There's so many things related to how to recruit good people, that it's not
Mhm,
talked about enough, right? Like you need to not recruit your best friend as much as you want to. That
mm,
oftentimes is not a good idea, right? You need to find people that have different skill sets than you that complement what you're doing. So what that means is, yeah, you're going to think differently and you're probably going to butt heads periodically. But if you can work through that and be very astute and again, humble about it, then you're going to get through a lot of things. So you need to be able to recruit people.
mm,
We all have also found you need to be able to sell your technology product or service, right? And I know that a lot of people are like, gross, I don't want to have to learn how to sell. But you know what? As a founder, you need to be able to sell your product or your company, whatever that is. Not that you have to do that on a day to day basis if you have a sales team, but
mm,
if you can't sell the vision, oh, it's such an uphill battle. Like our tech founders that can't sell, they struggle until they find that right salesperson. Even then, it's different because it's different coming from a founder that built this thing and loves it and is passionate about it, as opposed to someone you've just hired or brought on. So I often say, if you can't get excited and just sell this thing, then you may want to reconsider.
mm.
It's probably not going to be good for you. So that's the second thing. The third thing is, what have I said? Selling. And then what was the first thing I said again? Oh, how hard it, or no, what did I say? I don't remember.
Recruitment.
Oh, recruiting. Yes. Okay. So the third thing is, that's a good one. I think that companies need to really learn how to be frugal.
Mm,
And this is funny from a venture guy, right? But if you don't have to raise money, don't, because it's so expensive to give away equity. That's your most expensive trade off for
yeah.
dollars, right? So I highly encourage companies, if they can bootstrap their company, do it as long as you can, being frugal. I don't know if you have to go get a savings account or a HELOC on your house or whatever. I just think that if you can if you can just avoid raising capital as long as possible. Now, obviously, to scale, most of the time you're going to have to. You
Mm,
just at some point you're growing that fast, that big, you're going to have to raise money, but it's going to be at a much better valuation if you do it later on than early on. So I just tell companies, again, weird coming from a venture capital guy, but just bootstrap as long as you can and be frugal and scrappy and figure out how to do more with less for as long as you can so that you don't have to raise money, because it's so expensive in the beginning.
You have a very strong sales background from early on in your career. So I'm curious, given your experiences, what would you say makes for a good ask? You've talked about doing your homework, getting as close to the customer and finding out as much as you can about them and their specific issues in order to personalize the ask and make it relevant to them. But do you find that a lot of people, apart from just doing that, missing other components? If so, what would you suggest that people hone in on?
The things that I see missing in the marketing and sales process, because they're both
Mhm.
important. Number one, why should they care? You
Yeah.
have to answer that question. Why should your customer even care about what you're doing? And if you can't talk to the benefits for them, then you need to reassess your whole situation, right? Because it has to make sense to them. They don't care how it's made, they don't care how it was built, they don't care all the features, and they don't care all the different knobs and whistles that it has. They don't care about
Mm,
that stuff. What they care is about is how does it solve the problem for them? So you have to make sure that in marketing and sales, make sure that they understand why this is going to benefit their life and make a difference in their life and solve a problem. Okay.
mm,
Figure out what they want and then give it to them. And the second thing is close the sale. I have
mm,
so many pitches and so many founders that go and they do this wonderful presentation and it's so engaging. And they're like, okay, hope it was great. We'll probably see you next week. I'm like, stop right now. Close the sale. Do it. Say, we can take cash, we can take credit cards, you can go online, you can just go ahead and order right now. Whatever the case may be, close that sale right then. Even if it's a large, and most of it, if you think of tech, most of it's small. These are
mm,
small monthly payments, recurring revenue payments. It's not a big deal. But they just have to say, okay, we're ready to get started. It's as easy as this and this. Let's go.
mm.
And you're gonna love it.
Yep.
And if they do that, if they focus on the benefits and close the sale or the pitch or the presentation or online, they close the sale with pop-ups or whatever the case may be, right? You just got to close the sale then and there and then move on to the next one, right? Don't keep it in the queue forever.
Brilliant.
They're expecting you to do it.
Yep. Brilliant. We've covered a fair bit of ground, AJ. If you were listening to this episode, what would you say would be your top takeaway?
Oh, you're gonna put that on me, huh? Okay. I don't know. I think really, maybe the top takeaway for me is, and this is very cliche, so I'm very sorry, but when you're building a company or when you're going to get venture capital or when you're going to raise or when you're going to pitch investors or when you're going to pitch customers or when you're going to hire your next maybe another co-founder, or you're going to, whatever you're going to do, it feels like to me the underlying thread of everything is people. And how do you work with the best people and get the best results? And I think that's important because what we've learned at RevRoad is founders can have the most wonderful, beautiful company on paper, but if they're a mess internally or personally or together, or if their team is a mess or their employees are disgruntled or whatever, it's a train wreck waiting to happen. And we've learned that with people we've hired on. We've learned that with people that we worked with in partners. We've learned that with some of our mentors. And we've purposely surrounded ourselves with this amazing community of very polished, very professional, very wonderful individuals that also care so much to where you can accomplish anything when you do that. And I think that's what you have to do as startups and founders is you have to, I'm assuming that's your audience, is startups and founders and people building companies. Go build that community. Be intentional the way you do it and surround yourself with people that are going to help you, because people will, but you got to have the right people there. Not people that tell you yes all the time, not people that don't really care, not people that are in and out. It's got to be people that are willing to be with you for the long haul and truly care about your success. And again, so cliche, but I would say that the bottom line on everything is people.
And if listeners and those watching are curious, want to find out more or connect with you, where would you recommend they head to?
Yeah, so go look at the podcast. It's called, once again, the Midnight Founders Podcast. There's a LinkedIn page and there's a website for it as well. Again, Apple, Spotify, all those things. Go to revroad.com, which is our website. You'll find everything you need on that website. And then personally, I'm very active on LinkedIn. So if you have any questions or you would like to know more, just ping me on LinkedIn. And I'm not great at getting back to all my messages because I get so many, but I do, as requests come in for invitations and things to follow me or to connect with me, I look at those carefully.
Brilliant. We'll include links to that in the show notes. AJ, thank you for doing this. It's been brilliant.
Yeah, wonderful. Thanks, Vinay.